Good afternoon. This is Brian Split with Allendale here on Thursday, August 12th, 2010 with your closing commentary. Really the main thing that everybody was focused on today was the USDA supply and demand report released this morning. And off of the report, we did finish higher across the board in the grains. September corn was up 10 3/4 at 406 1/4. December corn settled 10 3/4 cents higher as well at 421 3/4. Soybeans September contract was up 9.5 cents at 1026. November soybeans were up 13 cents at 1028 1/2. Moving over to the wheat, we did have September wheat up 18 1/4 at 713. The new crop July was up 26 1/2 at 714 1/2. Again, a quick recap of what we saw in the report this morning. The USDA did increase the corn yield by 1.5 bushels, thereby giving us a production number of 13.365 million bushels. That number, both numbers were larger than the trade estimates, but the USDA also bumped up the corn demand. So even with a higher production number, they managed to lower our ending stocks to 1.312. The average guess was 1.307. So in and of itself, the ending stock number really didn't look that friendly. But when you take a step back and see that they did continue to reduce ending stocks even though they increased production, that puts a bullish spin on things. With the soybeans, they did increase yield from 42.9 to 44 bushel an acre. Again, that had production at or ending stocks at 360 million bushels. That's higher than the estimate of 334. That was neutral to bearish on the open this morning, with beans trading lower early, but the strength in corn and wheat did pull the beans back higher. Really, the thing on the wheat market here, we've all talked about wheat so much over the past couple of weeks. Wheat did get another supportive piece of information today. The USDA did reduce the world wheat ending stocks to 174.8 million metric tons. That was lower than what the trade was looking for. Again, that's the big drop that we're going to get. I don't know that the USDA is going to continue to reduce these world numbers. That's probably the drop that everybody's looking for. So take advantage of these rallies while you can. These bulls need to be fed, and I'm not sure what else there is after this world ending stock number that's going to continue to feed the bulls for the wheat market. Moving over to some of the other markets here, looks like cattle, wholesale beef was up a little bit here today. Cash done trading for the week at 95. That was all on Wednesday. We did have the October fat contract down a nickel today. Deese was up 12 cents, very quiet. The feeders did see some pressure today with higher grain trade. CEP was down 82 cents. Nove was down 95. Over on the hog side, we did have wholesale pork up yesterday. There is some talk that it may be up again today. There is also some talk that the recent trade that we've seen really dropping about $8 here has been a little bit overdone. So we're probably going to see a little bit of a retracement rally off of that drop. But, there may be some technical gaps that we need to fill. We did have October hogs up 97 today. Deese was up $1.07. Looking at outside markets, the close in the equity is going to be in about 8 minutes here. We are trading about 50 points lower in the Dow futures going into the settlement here for the actual stock market. We're continuing to see pressure from poor employment data and poor consumer sentiment and really other economic data that just isn't suggesting that this recovery is going very well. The Federal Reserve's announcement earlier in the week also put a negative spin on how this recovery is doing. Crude oil did finish $2.28 lower today at 75.74. That's over a $4 drop so far for the week. So this crude oil market is seeing a lot of pressure. We've seen some builds in the product inventories, even though refinery utilization was down. So basically, we're refining less crude oil. That's why crude oil inventories have been up. If that's the case, we should see the product inventories see a draw. But those are seeing builds. So that suggests that domestic demand just isn't what it needs to be. The dollar also up. We've seen this dollar rally over 200 points here this week so far, so that is also putting pressure on crude oil and equity trade. One other market of note today is the cotton market. That cotton had a very bullish report today. They increased Chinese demand. They lowered our world ending stocks quite a bit. I read a note from one of the other analysts suggesting that the USDA changed years of data on this report and caught a lot of people off guard and by surprise looking for a bearish report. So that did trade limit up at one point today, a full 3 cents a pound. Did back off a little bit from that limit up trade, but still settled sharply higher on the session. If you want to talk about anything that we covered today, review the report, look for any of our trade ideas, give us a call at the office here, talk to a broker. Our number is 1-800-2-MARKET. That's 1-800-262-7538. Otherwise, you can look at us online at www.allendale-inc.com. And again, this is Brian Split with your closing commentary. Good luck trading tomorrow. And we're probably in for an interesting settlement for the week here in the grain. So it'll be really looking forward to seeing what these markets want to do tomorrow. All right, everybody, take care.